Robinhood, arguably one of the greatest disruptors on the trading industry. In this video, we're going to take a look at how a little unknown trading app rose during the financial crisis and is taking on giant brokerage firms such as Charles Schwab and TD Ameritrade, and in the process become a fast-growing $7.6 billion empire. Robinhood is an American app-based stock brokerage that offers commission-free trading. It was founded in Palo Alto, California in 2014 by two former Stanford roommates, Baiju Bhatt and Vlad Tenev. Vlad Tenev grew up in communist Bulgaria, and his father was actually a professor of economics. His father had the opportunity to come to the US when Vlad was 4 years old in 1991. Vlad's parents had been working the same job for over 25 years at the World Bank. He then later went to Stanford College, where he'd meet his co-founder, Baiju Bhatt. And in 2008, he joined a trading firm just north of San Francisco. Vlad's early career did not, however, go ever smoothly with Lehman Brothers, collapsing in the 2008 financial crisis. This was a very interesting time for the industry, and thus, Baiju urged that the pair should start a little trading firm. It became clear to the entrepreneurs that the smartphone would be your primary tool for accessing the markets and doing financial transactions in general. When they had looked at the space and compared what they saw with the institutional world, where maybe giant brokerage firms such as Charles Schwab were placing millions of trades per day at effectively no cost, they had realized that from a technology standpoint, that's not that different from millions of customers placing trades per day, and they could offer that at lower cost by leveraging that same automation. The company's name comes from a mission to provide everyone with access to the financial markets, not just the wealthy. Trying to capitalize from this industry, the app was officially launched in March 2015. And on the first day of launching, they ended up with 10,000 downloads, showing the demand very clear, and over 50,000 the first week, and almost 1 million in the first year. Robinhood had offered everything their customers had wanted, ranging from stocks, ETFs, cryptocurrency, and banking on the go, all while being free. This was surely a disruptor. Robinhood had a clear idea of who they were going to target. They felt like the millennial demographic was struggling with these high fees, despite having a low amount to invest in the first place. Thus, Robinhood quickly rose to fame with the younger generation, as it was something they were actually looking for all these years. As of January 2015, 80% of the firm's customers belonged to the millennial demographic, and the average customer age was 26. 50% of users who have made a trade use the app daily, and 90% use the app weekly. In 2017, Robinhood raised $110 million at a $1.3 billion valuation led by Yuri Milner. And 1 year later, Robinhood had raised a total of $539 million in venture capital funding, with the last valuation at $5.6 billion. And finally, last year, an additional $200 million in funding Robinhood also raised, bringing the commission-free trading app in the $7 billion to $10 billion range. Robinhood, however, was no stranger to controversies. In October 2018, Robinhood had received almost half of its revenue from payment for order flow.
They were inspired by the financial crisis and all that. Well, guess what? They're getting a huge chunk of their revenue from high-frequency trading, and not.
It appeared to be taking more cash for orders than rivals by up to 60-to-1 ratio. In December 2019, the Financial Industry Regulatory Authority fined Robinhood $1.25 million.
Not so different from old-school Wall Street. In October, Bloomberg reported that the company gets almost half of its revenue through a practice called payment for order flow.
For failing to ensure that its customers received the best price for orders. Robinhood was also shrouded in security breach controversy in July 2019. Robinhood admitted to storing customer passwords in clear text and in readable form across their internal systems. Robinhood, however, declined to say how many customers were affected by the error and claims that it did not find any evidence of abuse. In November 2019, Robinhood was also shrouded in the infinite money controversy. when users were sharing on the infamous Wall Street Bets subreddit that they had been allowed as Robinhood Gold users to borrow unlimited funds to leverage their positions. The loophole was closed shortly thereafter, and accounts that exploited it was suspended. However, this did not occur before some accounts recorded six-figure losses. Robinhood has also lately been involved in controversial activity where they wouldn't allow their customers to sell out of their positions as the markets open. This has caused a number of unhappy customers, which Robinhood must sort out going forward in the future if the company wants to stay on the go to commission-free trading app. Overall, despite Robinhood's controversy, the rise to the top is one that is illustrated by providing a quality product or a service that people don't even realize they need until they have it. As the commission-free trading app edges closer to an IPO, you too can now purchase shares of Robinhood in your Robinhood app. Thank you for watching this video. If you like this video, do share with your friends and family and subscribe as we continue to make more quality content for you.